Good morning, everybody. Welcome back. Welcome back to our meeting today for the Pensions Committee and Pensions Board. It seems such a long time, but it's lovely to see you all, and I'm sure we'll have a very engaging meeting. A wee bit of housekeeping first of all. This meeting, you all will know it's live streamed, and you obviously know the address for that being live streamed. Members of the public will be looking on and listening quite carefully to us all. Also want to say, if you want to speak, if you raise your hand in the box there, and also before you speak, it would actually be very helpful for the public if you said who you were, because obviously pensions is of great interest, to our members, and that would be useful. And the other thing I would like to say is from agenda item 8, it will be exclusion of the public, and just after agenda item 7, we will have maybe a 5-10 minute break, but I will mention that at the time. Okay, so I will start the business now. Do we have any apologies, Mr. Peary?
I've got an apology from George Murphy and from Sandy Harrower.
Okay, thank you. If you could note that, that would be great.
Could I put apologies in for Andy?
Oh yeah, and that's so Andy Douglas as well. I'm just
okay. Moving on a little, declarations of interest. Members should declare any financial and non-financial interest they have in any item of the business, identifying the relevant agenda item and the nature of the interest. No? Agenda item 3, the minute. I'll give you a minute to look at the minute. If you maybe want to go over that, if you've not read it previously, then I'll ask to agree. So it's pages 3 to 9. Okay, have we all had a wee chance to read the minute? Okay, moving on to agenda item 4. That's the pension fund external audit, the annual audit plan. And this will be read by Gillian McCready. Thank you.
Hi everyone, thanks for having us here today. I'm Gillian McCready, I'm the Senior Audit Manager in the new external audit team for the pension fund. Colin Telford's also here listening in today. He's the Senior Auditor in the team and is responsible for the day-to-day running of the audit and doing a lot of the audit activity and testing. Also wanted to mention Pauline Gillen is the Audit Director and Engagement Lead in the new external audit team, and Pauline sends her apologies today. She's got a diary clash, but hopefully she'll be along to the next pension fund meeting to meet you all and introduce herself. So as the covering report explains, we don't have an annual audit plan with us to present to you today, and I just wanted to explain the kind of context and the reasons around that. As an organisation, Audit Scotland, we are still trying to return to our pre-pandemic timescales. Some of our 21-22 audits were still late to sign off last year, which had an impact and is getting started on this year. And that was combined with the new appointment round. So previously you would have had Ernst & Young as your external auditors, but as a result of the audit rotation that we have to do every 5 years, although it was extended by a year because of COVID, everyone has moved around in terms of public sector audit. So Audit Scotland is the new appointed auditor for the next 5 years. And for us internally, there's also a huge kind of exercise with everyone moving to new teams and new audits. And when we do that, it also involves kind of big lead-in time in terms of introductory meetings and handover meetings with the firm. So all of these things have led to us being a bit later in getting started with our audit work this year. But just to give you an update on where we are with it, we've largely completed our planning work in the risk assessments phase of the audit. And actually this week we are meeting to finalise the risks that will be included in our annual audit plan for the pension committee, for the pension fund, sorry. Then we will issue the draft plan to Catherine and Amanda and Justina for them to confirm the factual accuracy and provide any sources of assurance where appropriate in the risks identified. And then what we would do is issue the final plan, and obviously we would normally present it today and we would take any questions. So we're open to how we do that. I would propose we could circulate it through email and take any questions from members, but also happy to take any calls or set up separate meetings as required. So that will be in the coming weeks, so it's not too far off. It's just the nature of where we are at the moment. But in terms of what is looking likely to be in the plan, so we always set out the risks of material misstatement for the audit. And at the moment, there will definitely be a risk in there around management override of controls. That's a standard risk that's in all our annual audit plans. And this is just due to the nature of management being able to kind of override controls and make adjustments to the accounts. And we always plan audit procedures to address that risk, and we'll set them out in the plan as well. And that's a standard risk across the audit. In terms of the pension fund, though, we're also likely to have a risk in around the valuation of investments, in particular level 3 investments. There's a high level of estimation and judgment around the valuations and the financial statements. And so we'll take sources of assurance from management, and we'll also plan some specific audit procedures to give us assurance over that risk. We'll also have some information about our wider dimension audit work in the plan. So that's around financial management, financial sustainability, governance, etc. So for the pension fund, that's likely to be, looking at the funding position, etc., governance arrangements around decision making. And also this year, we are required by our planning guidance to do some work around cybersecurity arrangements and climate change. So we'll be looking at that for both the council and the pension fund, and there may well be some overlap around what we do for both, and we'll try and minimise that and rely on the work that we do for the council. Lastly, the other thing in the plan will be the audit fee. So this year the audit fee is set at £29,450. The audit fee is set by a completely separate business group within Audit Scotland, Audit Quality and Appointments. So if there's any questions around the audit fee, I can try my best to try and answer them, but I may have to come back to you because it's completely separate from us within Audit Services. And then just before taking any questions, if there are any, we are required by the auditing standards to ask those charged with governance if they're aware of any known, suspected or alleged frauds when we're planning our audit. So if there are any, if anybody wants to kind of alert us to that, or separately through email or anything, that would also be greatly appreciated. So I'm happy to take any questions on anything I've said.
Just firstly, I want to say thank you, Gillian. That was good to have an update, and the schedules and the key milestones around that. And we do welcome Audit Scotland to do this work. We're delighted they're doing that. So I'll now open it up for questions. Who's it we have a question from? Sorry, could you say your name first?
Councillor Spears.
Hello, Councillor Spears. What is your question for Gillian?
We've been asked in 2.1, the board is to note this. Should we not put it back to the next committee meeting once it's signed off? Then we can actually vote on it, and if there's a particular problem, then we're voting on a signed off document rather than just a noted document.
I I think Councillor Spears, it's just saying, you know, it's the key milestones of the accounts production. That's coming forward. So we're just noting that's what's coming ahead of us actually from Audit Scotland. It's their schedule in relation to the work that they're doing for Falkirk Council. You know, I don't have any issue with no unless other members are.
Convener. Sorry, it's Brian. Just understand Councillor Spears' point. I think normally internal audit plans come to committees for approval, but if I'm right in my recollection, this plan doesn't come to the committee for approval. It would only come for consideration and comment. So you could decide to bring it back, Gillian, if you wanted to do that to the next meeting, but just to be clear, it wouldn't be for committee's approval. The plan will be the plan.
Yeah, so I'm happy to, basically what I was proposing was that the plan will be ready in the next couple of weeks, and we have an internal deadline of kind of the end of March, so we would be happy to circulate it with members, take any questions or comments and issue the final version, but ultimately our plan is to be noted. So I'm happy it can come back at the next one, but members will have seen it in the next few weeks and we can circulate it and kind of note it in that way, if that makes sense.
Yeah, that's fine, Gillian. Yeah, that's okay. Happy with that. Is all members happy with that?
No. We have a committee to sit here and be able to discuss things privately, noting it on your laptop. It's not really ideal, is it? And it's not the way forward. And I think as the chairman of this committee, or chairperson of this committee, you would want it to come back so we could all discuss it.
That's what it says, Councillor Spears. I'm quite happy for it to come back actually to this committee. Is all the members happy for that to come back to this committee? I have another question from Councillor Steinbank.
Yeah, just a point of clarification, Chair, because I do share the concerns Councillor Spears has. Can I just get clarification that the process of privately commenting, which I understand is just as we weren't able to see this plan today, wouldn't be the sort of formal comment procedure? That would be just essentially so we have an idea what this committee believes and has any comments, but there would still be a formal opportunity at a committee meeting at a later date. It's just to give Audit Scotland the opportunity to hear from members when we have actually something full in front of us. So sounds like not the ideal option, which would have been to have it in front of us today, but at least a mitigatory measure. I just want clarification maybe from the representative of Audit Scotland, perhaps.
Yeah, absolutely. So in terms of me saying circulating it and looking for comments kind of in the next few weeks, that would just be, I'm happy for it. Sorry to have confused everybody, sorry about that anyway. But yes, I would issue it to members so that they could see the plan in a timely manner rather than waiting for the next committee, but also happy for it to come to the committee for that formal process of discussion as well. So yes, absolutely, we could go through both processes.
Thanks for that. I'm content with how that's been proposed then, Chair.
Okay, is there any more questions? So we've agreed to note it at this moment in time and for it to come back to this committee for further discussion. Is that agreed?
Agreed.
Thank you. Moving on now to agenda item 5, which is general governance matters. And that report will be taken by Catherine Carruthers. Thank you.
So the report starts with the SPPA consultation that was held earlier this month, and it's regarding the current disconnect between the inflation rate that pensions are permitted to grow free from tax each year and the inflationary uplift that is applied to care pension in a tax year. In years of low inflation, this disconnect does not present a significant problem, but in high inflation years, the disconnect can cause perverse and adverse outcomes for members. For example, in this current tax year, when we calculate the growth in pension savings, the inflation pensions are permitted to grow by is 3.1%. And unless the revaluation date is changed, the inflationary uplift that will be applied to care pensions in this tax year is 10.1%. The policy intention behind the annual allowance was always that it's only new benefits that should be caught when assessing how much a pension has grown by. Any benefits that have already been built up by a member should be allowed to grow in line with inflation free of tax. Changing the revaluation date from 1 April to 6 April will achieve the policy intention. However, you will note that we flagged up a number of issues in that initial consultation, and Scottish Government have taken those concerns on board and released a 2-week consultation which started 3:30 on the 14th of March, so just over a day ago. And the amending regulations that need to be put in place to achieve that move of date from 1 April to 6 April. As I said, the consultation's only 2 weeks long and it closes on the 27th of March. I've not had a chance to look at those regulations in detail given the short elapse of time between them being released and this meeting, but it is clear that the policy intention will result in no change to entitlements, so no members will be adversely affected by the change to the revaluation date. There was also a delay in announcing the September or confirming the rate of increase for pensions increase and the revaluation to care pensions. And that rate of increase is 10.1% as we thought would be the case. Employee contribution bands have similarly been adjusted by that 10.1%. And all of the fund employers have been provided with the statutory guidance and spreadsheet provided by GAD that contains the contribution rates. As you know, over the last couple of pensions committees, I have been bringing snippets about the pensions dashboard. As you are aware, the UK Pensions Dashboard programme aims to provide a digital platform which will enable people to access information about all of their pension savings, including their state pension, in one place. The fund's staging date is the 30th of September 2024, and work to ensure the fund is dashboard ready is underway. You may have noted in the news that the launch date for the dashboard, which was back in the day originally planned for 2015, pushed back to 2019, then pushed back to 31st August 2023, has now been extended again due to technicalities. However, we do not expect the fund staging date to alter. Consequently, to ensure compliance with the implementation of both the McCloud remedy and onboarding to the pensions dashboard, the fund intends to recruit 2 fixed-term contractors to work on improving the fund's data. And the final thing to note in this paper is that the date for the 2024 LGPS Governance Conference, which will be held in York on the 18th and 19th of January. If you are planning to attend, hold those dates and let me know. I will be bringing more information about that as and when it's released. Over to you, Lorna.
Thank you, Catherine. I'm going to open it up. Does any members have questions? I have several people with their hands up here. Firstly, I'll take Mr. Morgan. If you've got a question.
Thanks, Convener. Catherine, would you just be able to clarify something for me? So you mentioned there the 10.1% also being applied to the contribution bands. So I guess that's the 6.5% or 8% or whatever of pensionable pay. With the significant disconnect this year between inflation and likely pay increases across our employers, does that leave the pension fund in a less favourable cash flow position because the bands are being pushed up by more than people's pay are increasing?
So the answer is yes, we probably will see contribution rates come down, the income from contributions, employee contributions. However, the movements, because we do the steps in 0.1%, it's actually maybe not going to have a significant impact as you think, because the tiers, the way it moves. So yes, people might see a 0.1 or a 0.2% drop in their contribution rates, but overall that should not really be material.
Okay, thank you.
Thank you, Mr. Morgan. I have two other hands, I believe, from the Foundry. I can't see who's actually wanting to ask the question. It's Councillor Spears. Thank you.
The Chancellor's decision yesterday regarding pensions affect our pension fund, where I believe people over 65 are not allowed to contribute their millions. And that we have an ageist policy regarding employees and people that want to have a decent pension at the end of their term here.
Okay, so the age at which you can no longer be a member in the local government pension scheme is 75, and
No.
that is a UK-wide restriction. Members.
You'll find you cannot increase your pension contributions after 65.
I'm sorry, I don't understand that, Councillor Spears.
Will that change with the Chancellor's statement in the budget yesterday?
There is no restriction. I don't understand where you're getting that information from, so I will take that offline and investigate that for you. But there are no age restrictions apart from you cannot join the LGPS if you're aged 75 or more.
Is that okay, Councillor Spears? Obviously that will be looked into for you, and we'll get back to you on that one as well after we've read all the detail that was put out in the budget, and just confirm or clarify that or not.
Well, it already has been looked into, and I'm coming back to you with, you cannot increase your pension contributions under our pension scheme if you're over 65. That was a very, very clear instruction that I was given.
I can tell you as the pensions manager for Falkirk Council Pension Fund that you can pay additional contributions if you're aged 65 or more into the LGPS in Scotland, and I will be happy to show you the regulations at the end of the meeting that confirms this. With regard to the removal of the lifetime allowance, that will have limited effect on our membership.
Thank you, Catherine. Any further questions from the Foundry, please?
No.
No, thank you. I don't see any other questions, hands up here. So I'm going to move forward and recommendations. The Pensions Committee and Board are invited to note the contents of this report. Are we all agreed?
Duly noted.
Agreed.
Thank you. Moving on to agenda item 6, it's the investment review, and this report will be taken by Albert Chen. Thank you.
Okay. Thanks very much, convener. Good morning, everyone. So the investment update for the quarter ending 31st of December 2022. I'm not going to go through the paper, the entirety of the paper, so I'll take it as read, but just to highlight a couple of important points that I think you should be aware of. Just firstly at 3.2, just a quick update in terms of what happened over the quarter. Global equity markets performed very strongly. They rose almost 2% in sterling terms, but this masked US dollar weakness. So sterling performed strongly against the US dollar. In US dollar terms, global equities returned almost 10%. Value stocks outperformed growth stock counterparts, and by value, we typically refer to those stocks that are assessed as being cheap relative to the quantum of their earnings. So value stocks performed very strongly, with the energy sector notably delivering strong returns. Meanwhile, some of the largest names, particularly those with technology exposure, declined following disappointing updates. Bonds gained as long-term yields dropped, although short-term interest rates rose with various central banks increasing rates over the quarter. Moving on then to section 4.2, table 1 on page 28 shows Falkirk's investment strategy. So the target allocations and the permitted ranges. The table in section 4.3 then shows you the evolution of those policy group allocations on a quarterly basis over the past 12 months. So if you look across that table, you can see the position as at 31st of December 2022. At the very end, you can see what the relative weights are relative to target. So a slight overweight to equities, also a slight overweight to real assets, and offset by underweights to non-gilt debt and LDI. If you look at the evolution of those policy groups over the past 12 months, the main things I would draw your attention to would be the decline of the other policy group at the bottom. So that has reduced from 7.1% to 0%. And that has been reflecting the divestment of the Baillie Gifford Diversified Growth Mandate, which did not fit the strategic policy group and investment strategy. So that has now been disinvested. The other aspect I would draw your attention to is the LDI policy group. So LDI refers to the fund's holdings in UK government gilts. Historically, the fund has had an underweight position there, on the basis that interest rates historically have been at very, very low levels and were not deemed to be sufficiently attractive enough to warrant a position at the target allocation. You'll see that that has moved from the 30th of June 2022 from just under 6% to 8%. And that is reflecting the activity that's taken place, investment activity taking place to increase that allocation as interest rates have risen and have become more attractive. Moving on to paragraph 4.4, that is a more up-to-date position of the fund's asset allocation, showing the position at individual mandate level as well as policy group level. You can broadly see that at policy group level, the positions are broadly unchanged. So a slight overweight to equities and then underweights to non-gilt debt and LDI. And then in section 5, moving on to the fund returns over the quarter, at 5.3, we note that the total fund returned 2.5% over Q4 2022, and that was ahead of the benchmark return of 0.2%. We also note that it's important to focus on the long-term returns. On a quarterly basis, that is very, very short term, can be very, very volatile. So in 5.4, we refer to the long-term returns, where the fund has appreciated at 7.5% per annum since 2001, ahead of the benchmark return of 6.3%. Looking at more recent returns over a 5-year period, the fund has risen 5.8% compared with the benchmark return of 2.6%. The other aspect we want to draw your attention to is the funding level. So the funding position is assessed formally on a triennial basis. The last valuation was carried out at 31st of March 2020 by Hymans Robertson, which indicated a funding level of 94%. And as the fund's assets have increased in value significantly since March 2020, from 2.3 billion to 3.2 billion, and at the same time interest rates have risen, we estimate that the funding level is significantly improved from where it was. So just to talk about investment manager monitoring, the managers are monitored on a quarterly basis. Full details are considered at the quarterly joint investment strategy panel, for which there is a paper later in the meeting. And then moving on to the conclusion that the fund's returns were strong at 2.5% over the quarter, and the long-term returns remain strong and ahead of benchmark. So happy to take any questions or comments.
Thank you, Mr. Chen. That was really informative, and it's really good to hear that the funds have performed really well. But I'm hearing that in quite a lot of funds at the moment. However, I'm going to open it up for questions. I'm sure members will have some questions. So I believe Councillor Spears, do you have a question?
We live in very volatile times, and under a recent council budget, there hopes to be savings due to voluntary redundancies. Is our fund strong enough to handle, which could be an avalanche, voluntary redundancies coming forward to the council?
Sure. So from an investment perspective, regarding the redundancies, I suspect that would be an issue potentially for cash flows. So, for example, if there are any cash payments, an increase in cash payments that would be required as a result of that activity. The main thing to highlight is that the vast majority of the funds or investments are highly liquid, so that these can be converted to cash with very, very short notice. Now, the thing that we need to bear in mind is you don't really want to be selling out. You don't want to be a forced seller of assets. So you don't want to have to sell things as and when markets are in a bad place. So having to sell things when things are trading poorly. And so to offset that, the fund also has decent allocations in income generating assets. So the infrastructure and the property allocation, which is just over 20%, generates a decent level of income, as do some of the equity mandates. So in short, I would just say that the fund is well positioned to handle cash flows. So if there is an increase, I would expect that the fund is well positioned to be able to manage those.
Okay, thank you very much. I totally agree with you on not selling assets at a bad time.
Councillor Flynn, do you have a question?
Yep, I do. Thank you, convener. My question, Albert, if you're able to answer, on chart 4.3 on the point you mentioned for others, I think you mentioned it was a Baillie Gifford fund. Was that 7.1% just one fund? And what was the, if you're able to say, there must have been, I'm guessing, a loss on our investment on that. Are you able to identify what that was, please? Thanks.
Sure. So the 7.1% was invested in the Baillie Gifford Diversified Growth Fund.
Right.
And the reason that it was sold was not because the fund had incurred a loss on it. It was more that that particular vehicle didn't fit the overall investment strategy of the fund. So that was a legacy investment that the fund had held for many years as a result of the investment strategy review. So if you think about the pension fund,
yep,
as it's invested, it itself is a diversified pot of assets.
Yep.
So within the diversified pot of assets, you are holding another vehicle which itself was a diversified pot of assets.
Oh, right.
So it was felt as part of the review, well, you already have the ability to diversify, so you don't necessarily need to hold that vehicle which in itself is a diversified pot. So at the policy group level, you're able to achieve that diversification separately by allocating between the policy groups. And so that was the strategic reason. It wasn't that the fund had lost any money.
Right. No, that's fine.
Yeah.
Thank you. I appreciate that information. It helps a lot. Thanks, Albert. Thank you, Convener.
Thank you. I've got a question, Albert. I'm actually looking at the performance measurement rates of return, things like that. How often, because the world is so volatile at the moment, how often is that monitored? I mean, obviously we had that bank in America that failed quite recently, and what I'm thinking is, you know, obviously if there's problems there, is people able to monitor that and check that and obviously change their investment quickly before a lot of money is lost?
Yeah, sure. That's a very good question, and it becomes particularly pertinent when times are volatile. So the committee should take comfort that the investment managers are monitoring this, you know, daily. Now that doesn't mean that they're necessarily taking action daily, because very often by the time that news is already in the headlines, it means the horse is already bolted. But your investment managers are constantly looking at the markets and considering, you know, what action they may or may not be taking with regards to how the underlying investments are invested. Now, the thing about the particular instance in America that's happened, you know, that is very, very specific to the financial sector, and very often certain managers will have different views about whether the financial sector is an appropriate sector to be invested in, full stop. So it's likely, I was looking at the fund's equity investments. The vast majority of your equity managers will have very, very minimal financials exposure, full stop, because it doesn't fit with their investment strategy and how they're invested. But to answer the question short, you know, in short, you know, the managers are monitoring things, you know, on a daily basis. That doesn't mean they're taking action every day. It just means they are absolutely watching what is going on in markets and thinking about how that relates to your portfolios.
Yeah, thank you. That's reassuring. Do we have any more questions from our members here today? No more questions? Okay, the recommendations are the committee and board are asked to note the recent investment market developments, the fund's strategic allocation, the fund's performance for the period ending 31st December 2022, and the investment monitoring activity of the Joint Investment Strategy Panel. Do we agree?
Yeah.
Agreed.
Thank you. We're now moving on.
Just to say, around you can hear, well, there's a slight buzzing, there's a fire alarm, and it's just a test of the fire alarm system.
All right.
And it goes off.
I did hear something. I wasn't sure what it was, though. That's the thing.
I
With
forgot
the earphones on, so maybe they aren't good in situations like that. But thank you for telling me, Mr. Peary.
Good.
So we're now moving on to agenda item 7, which is engagement and voting activity, and that will be taken by Catherine Crothers. Thank you.
So, as you know, the fund uses a dedicated engagement specialist called Hermes EOS, and they've been appointed for 4 years. We get quarterly reports for them, a voting report showing the number of votable meetings held during the quarter and an overview of how those votes were cast, an engagement report showing the split of engagements by theme and region, and a public engagement report commenting on the engagements that have taken place. These reports are appended to this report and set out the work Hermes have undertaken during Q4 of this year. The highlights report, which is not a public report, has been uploaded to the SharePoint portal, and the committee and board are asked to treat this report as confidential. Over the last quarter, Hermes made voting recommendations at 17 meetings and recommended opposing 1 or more resolutions at 12 meetings. and supported management on all resolutions at the remaining 5 meetings. In addition to this, the fund itself has participated in Share Action's call to action at the end of January, alongside a number of other LGPS funds, to ask certain banks to stop funding new oil and gas developments. We've previously worked with Share Action to help bring a resolution to the Barclays 2020 AGM, asking them to phase out financial support for the fossil fuel sector. The resolution, whilst not passed, was regarded as helping move Barclays in the right direction at the time on their climate change policy. There is also the Local Authority Pension Fund Forum Engagement Report for Q4 and the ESG reports from Schroeder, Newton, Legal and General, which have all been uploaded to the SharePoint portal. Over to you.
Thank you, Catherine. I'm actually going to open it up for questions now. Does any members have any questions? Thank you.
David Morgan, convener.
Yes, I see that. Thank you. Could I have Mr. Morgan, please? Do you have a question?
Thanks, convener. And I'm going to sound like a little bit of a broken record on this. I raise it pretty much every meeting, but I'm still not content that we're tracking beyond the final milestone of engagement here. So just refer to point 4.4 in the report. Milestone 4 is successful delivery of the objective, but it doesn't talk about unsuccessful delivery of the objective and what happens. We have a commitment in our responsible investing approach to divesting as a last resort, and we're not. I don't feel like we're doing everything that we need to in order to identify when we've met that that threshold of last resort. I do recognise that it is covered there under 4.7. I guess that's reference to the similar comment that I made in October. But I certainly I've not seen, unless I've missed something, that we are tracking progression, I guess, between milestones 3 and 4 in the plan in section 4.4 as to whether or not we are successfully achieving the objectives with the companies. Yeah, I just would my preference would be that we were doing slightly more to track companies as they get towards the end of that journey.
Thank you, Mr. Morgan. So basically what you're saying is you would like to see more of a narrative with regards to this, how they're tracking these companies and where they're being successful and being unsuccessful.
Well, I don't think it's necessarily for Hermes to, so Hermes can only take it to a certain stage on our behalf. If their engagement has failed, that's the stage at which we as a fund are required to take action in line with our own policies, and that could lead to divestment. I recognise it's a last resort, and that's how it's articulated in our own policy and procedural documents. But everything here at the moment assumes that every engagement action results in a positive outcome, and I'm not certain that can be the case. There will be engagement action which fails, and consequently we need to be taking a decision as a fund as to how we deal with that.
Yes. And I appreciate that, Mr. Morgan. Just hold on a moment. I've got Amanda wishes to add something to that. Thank you.
Thanks, convener, and thanks, David. I would just, I suppose, provide a little bit of comfort that this has been raised following the last comments. This was raised at the Joint Investment Strategy panel, with some discussion and debate around how do we understand at what point we will feel that divestment becomes necessary, and how are we tracking to that point. So I don't have a final sort of answer for you yet, but I suppose it's just to recognise I have taken it to the JISP, and we are having those conversations about how do we monitor that more effectively going forward.
That's very reassuring. Thanks, Amanda.
Thank you. I have another question here from in the Foundry, I believe. Is that Councillor Spears?
Yes.
Thank you.
Remind me not to put my hand up first next time. The 7, shared action. Will there be a statement going out then that Falkirk Council no longer wants to have any shared interaction or funding to oil companies? I think it'll be a very important question in Grangemouth.
So the fund believes in engagement, so we do invest in oil, and we would seek to use our voting rights to have a just. So we do invest in oil. We are pushing the banks by joining Share Action and that call that they made. We are pushing the banks to move in the way that we are pushing the oil companies to move to a more sustainable base, so away from oils into renewables, and that is the action that we as a fund have taken.
I think you'll find oil companies are at the forefront. They try to get to net zero and to produce equipment to generate power and electricity, but there will always be a use for oil. It's a lubricant as well as a fuel. And we need to be very careful in this area, especially when a lot of people's pensions and employment are reliant on oil companies. So I'll go back to my original question. Do you intend to try and withdraw from oil companies? Because this would be an interesting question, especially in Grangemouth.
So currently we have no plans in the fund to disinvest from oil. We have investments in oil, and as I said, we use our voting rights to engage with oil companies to encourage them to move to a more renewable, sustainable base.
I understand your answer twice to the question, and I know it is a political question rather than one for this agenda item today, but it is raised at this agenda item today. So maybe some of our political people could answer that question.
I've got Amanda here to come in, Councillor Spears, and answer part of that question.
Thank you, convener. I suppose I would just cautious about the idea that this is a political committee, because we have a duty to the pension fund members in this committee. So when we're talking about investment strategy, which is brought before this committee for agreement, we are talking about what's in the best interests of our members. And that's the kind of delicate balance that Catherine's talked about, and also that we talked about earlier on with some of the earlier papers, that delicate balance between trying to make sure that we are adequately funding future pensions, but also trying to do that in a way that we're comfortable, that we feel is sustainable and is addressing a lot of the environmental issues and also other social issues that that the world is experiencing. So I suppose it's just to emphasise that this isn't a political decision at this committee. It's about what's best for the pension fund members. Thank you.
Thank you, Amanda. I now have some more questions. I've got a question from Councillor Steinbank, please.
Thank you, convener. It's just one procedural question and another question that I might follow up on if depending on the answer. As a relatively new member of the committee now, I do apologise for not asking this previously on this sort of standing item. Do we have a representative from Hermes invited or attendant at this current meeting? And if not, why not?
When we contracted Hermes as our engagement specialist, there was no requirement for them to attend Pensions Committee. They have agreed that they will send a representative, I think it's to one meeting a year, to provide an update, but that was not part of the contracted terms with them.
No worries, that's a satisfactory answer. And I'm just going to go to 4.7, which I think somebody's drawn an example of. Obviously, just notice at the bottom, the wish expressed at October meeting that the fund should have the means of tracking a company's responsiveness to ESG challenges. The metrics we're using for those, how much of a critical eye the Hermes give to those, are we taking essentially that tracking on self-reporting by the companies, or is there a more critical lens used by Hermes to sort of assess that responsiveness to ESG?
Hermes do give examples of the engagements that they have in the highlights report and the public engagement report, and we a good message I've just had is the best person to bring in Bruce. Can you come in here, Bruce? Actually,
yes, of course I can. Yes,
thank you
absolutely.
so much.
You know, no, I mean, it's Hermes' raison d'être is to monitor these things. I mean, you know, I think David highlighted the milestones, and they do monitor the milestones. They're looking for improvements from companies on issues that they identify, and so they are monitoring the milestones very much so. And I might just add to David's point, you know, absolutely they do not always succeed in achieving what they want to achieve. And so there comes a point where there's a decision by the investment managers that the fund appoints, you know, is the financial risk that failure creates sufficient to divest the stocks? And that's the way it works in practice. But yeah, raison d'être of Hermes is to monitor these things carefully, and you know, we've worked with EOS over many years now, and you know, they have gradually improved that monitoring of the milestones and actually reporting on it. And it may not be perfect, but it's not necessarily an easy thing to. In many cases, it's not an easy thing to you know, be clear on. There are lots of grey areas, if you like.
Just
so if that helps. Yeah.
Yeah, I think I was going to rephrase that, but then you did answer slightly towards the end. I think perhaps just for clarity, could you give an example of a grey area where perhaps self-reporting by a company is not sufficient, but we need to dig a bit more into the credibility?
Well, I don't think Hermes take any self-reporting at face value. I think that's the point. You don't take Hermes company reports at face value. You dig a bit deeper.
No worries. Perhaps just a last question. Thanks, convener. Obviously, Hermes are going to be attending annually. Do we know the next meeting they'll be attending in our cycle?
We haven't actually fixed that with them, but it will either be June or September or December. Sorry.
Thank you, Catherine. Thank you, Bruce.
Thank you, Councillor Steinbach. Is that all your questions now?
Yeah, that's all my questions.
Thank you. We do have a hand up from the Foundry. Is there somebody in the Foundry that wants to ask a question?
Apologies, that's an old hand, convener.
Okay, that's
Councillor Quinnedy's hand up. I don't know if he's taking it back down.
Yeah, I've taken my hand down. Yeah, I'm quite happy with kind of being covered with what other questions have been asked, so I'm happy. Thanks.
Right, thank you, Councillor Quinn. If there's no more questions, then the Pensions Committee and Pension Board are invited to note and comment on contents of the report which just happened and the reports provided by Hermes EOS. Thank you.
That's not going to be private
You need to just agree this.
So agenda item 8 is now exclusion of the public. I don't know if you want a wee 5-minute comfort break at this point, or do you want us to carry on?
No, a 10-minute break would be helpful.
Is that the majority of members want a wee break for 10 minutes?
Content with that, convener.
Okay. Right, we'll have a wee break for 10 minutes. See you back in 10 minutes, okay? And it'll be exclusion of the public at that point. Thank you.